Joining us to talk more about the market, Savita Subramanian. She's BofA Securities head of equity and quantitative strategy. And there's so many concerns that are right in front of us, Savita, but you kind of eventually come down on the notion that stocks are probably a better place to be than a lot of alternatives because of where rates are and because of all the liquidity. Are you kind of just a reluctant owner of equities right now, Savita?
No, I mean, I wouldn't say reluctant. And good morning, Joe. I think it's more about the idea of where you're going to go to get income. And from that perspective, it's really a no-brainer. I mean, you look at stocks and they're offering, 3.5 times the yield of a 10-year treasury. The dividend yields look relatively safe. So I think that value proposition is really unassailable. I think where it gets a little bit more murky is the idea that, a lot of this rally that we've seen off of the March lows has been driven by this liquidity being pumped into the system from either the Fed or fiscal stimulus, just looking for a home and basically finding it in either, defensive dividend yield or in FANG stocks. And I guess my worry is if this liquidity machine slows down or turns off, or if we see any friction in terms of how much stimulus we're going to get from the government or the Fed, I think that's when it's really hard to continue to buy this theme. So I think, one of the things we pointed out in a note the other day is that if you look at the Fed balance sheet versus the weight of FANG stocks in the S&P 500, it's basically the same chart. So my sense is that when you sort of disaggregate all of this stuff and you look at what's been driving the market higher, we all know it's tech, but the reason tech's been moving higher is because it's essentially investors looking for something to buy, and what they're settling in on is, high growth tech companies. So that I think is the biggest trick. I like what Mike said about the value rotation. I think he's right. I mean, we're in the early days. This could be another head fake like what we've seen time and time again for the last 10 years. We've seen these little rumblings of cyclicals recovering, and then they've just been smacked down by tech leadership over and over again. Now, I think why this time might be different is that if you look at positioning and valuations of growth stocks, namely tech stocks, versus value stocks like financials, like industrials, like energy, the valuation dispersion is massive, and tech is, as you know, more expensive than it was back in 2000 by many measures. So I think that's where we get to a point where things really look extreme right now.
Would you throw in the political concerns with, with Washington and even states looking at tech, Savita? I mean, that could match up with what you're talking about technically.
Absolutely. I think one of the big risks for tech, the catalyst for selling, is regulation. And I mean, you've got it from all angles. You've got anti-monopolistic regulation because these companies are just getting so big. You've also got data privacy issues. You've got all sorts of issues facing tech from a regulatory perspective. This isn't a new story, though. We've been talking about this for, a bunch of years now. So I think, really what we want to see is the campaign line items of each of the candidates as we move closer to November. But let me tell you one thing. So the one thing that we've noticed in the market is that as you approach from here to November, historically during an election year, you tend to see a massive pickup in volatility. So 30% increase in the VIX from today to election day based on historical trends. And that, I think, would also make me cautious on, continued outperformance of the S&P versus many other benchmarks.